Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Today, we're taking a look at one of the larger banks, Citigroup, ticker symbol C. This is a large cap bank with a market cap of $79 billion. They're best known perhaps for their credit cards, but they provide a full suite of standard banking services all around the world. And here we have Citigroup's annual chart. And not only did it take a plunge back in March, but the rest of the financial sector, but the recent downturn has caused Citigroup to lose quite a bit of share price. Although if you look here, you have two pretty close to doji candlesticks in a row, signaling hesitation and probably stagnation at the descent, which is great for those looking to buy in. You'll see it's well below all the major moving averages and pretty close to the low point of the last year. We scroll down here, you see the RSI is oversold and is just starting to rise. Both stochastics are the same, oversold and just starting to turn back up. You have volume chart showing a lot of red days lately, but with basically average volume. We're finally starting to get a green day in there. You'll notice yesterday was one of those rare gray days, meaning it has equal buying and selling pressure. And the MACD has apparently reached a trough and is starting to turn back up. Of course, that can always go the other way, especially given the market sentiment yesterday and the fact that we have a speech from Jerome Powell today. So we shall see. I'll switch over briefly to the fundamentals here. You'll see very low short interest on Citigroup and 70% institutional ownership. That leads me to think that smart money really likes this company. The debt to equity ratio shows it has more debt than 76% of its peers. Not something that is rare in the large bank sectors. We know that how they extend themselves. Unfortunately, it seems to be a fact of life in banking these days. The PE ratio is low, 6.51 PE, and that is exceptionally low. In fact, PE is lower than 87% of other companies in the banking industry. The operating margin is above average, beating out 66% of its peers. That's about a 23% operating margin. We don't have a gross margin here, which I'm curious about why there's a lack of the data here. But the operating margin is still good, so take that for what it's worth. The return on equity is average, as is the growth rate, both average. And the dividend is outstanding, 5.16%, with a payout ratio of only 32%. And that is a secure dividend, a well above average dividend, and it is secure. Now, I do have a position in Citi, and this downturn is certainly making me consider getting some more shares. But I'd be curious to know what you think of Citigroup. Please let me know in the comments below. And remember, none of this is financial advice. I'm not a financial advisor. And if you got something out of the video, I'd appreciate it if you would hit the like button and subscribe to help out the channel. If you enjoyed this kind of content, please hit that bell notification to be alerted when new videos post. Also, if you'd like me to take a look at a particular company using the indicators I present here, mention that in the comments, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.